Good morning, everybody. It's Michael here with your latest supply and demand market report looking at metals and the agricultural complex. Before we start, just a reminder that these videos are purely for educational purposes and not a recommendation for you to buy or sell. Okay, so we are going to start with silver and looking at silver on the weekly chart. Nothing much has changed. Silver had an inside week, a very, very narrow range. So nothing much has changed since we last discussed it. We've had a market that's had higher highs and higher lows, and it's pulling back into a demand zone right here. We talked about this range and the shakeout that seems to have happened, looking at all of this area just outside it, and rallied back in. It hasn't, as we discussed, gone above this price level, which is significant. Let me just draw that in again. It hasn't gone through that price level, which we would have preferred. As you see, we do note that sellers have come in, but buyers now will have something to prove if we get down here. Ultimately, it's a watch for now. We're still not yet at demand, and we're still pulling back from that resistance area, that supply area that has held prices up since it was formed or held prices down, I should say, since it was formed in June of 2021. So it's a watch. And looking at Palladium has continued a downward slide. The area that is still holding was this one, and now we've come even lower down. So let's take a look and see if we formed any new levels there. There were sellers here, but it's a really poor structured level. So I would not recommend that this be traded. It is really, really poorly formed. So we're just waiting to see. We are clearly still in a downtrend in Palladium, though. So taking short is still the thing to do. We just haven't created quality levels to trade at yet. What we did do was go back to the scene of the crime where we had the breakdown and had a test right there. Whoops, right there. So this is what I mean by trying not to be an evangelist for any particular methodology. This retrace was for the support and resistance traders, and it's clearly worked for them. It's about developing your level of skill in whatever methodology you do choose. Okay. And looking at platinum, it continues to fall. Had a bit of a spinning top of a week, and it's still clearly in a downtrend. It's taken out demand, so we can clean up this chart. We've still got supply there. That's the quality one overall, and we're looking also for a pullback in that one to supply before we do anything. But for now, nothing much to do. It's watching it. A lot of these markets are like that, and we do have periods like that sometimes. So now here we are on gold, and with gold we can see we are eating deeper and deeper into that area that we circled. Remember, we discussed that we would prefer for prices to come to this lower area, to this area on the weekly, which is, as you can see, it's on the daily, because the location of this base rally, it was not ideal for us. So we can see that it's been eating deeper and deeper into that level without much of a significant bounce. So sort of just taking out the buy orders in that level. Okay, and finally in the metals complex, looking at copper. Copper has come out of that supply and it is rallying back up. So an opportunity to consider in copper is right there, to see if that gathers any traction. So that's an idea in copper. The move away might not be big enough though, so do your due diligence. It's an area of interest, nothing more. It's not a recommendation for you to short at that level or anything. Assess the quality of the level and see if it meets your criteria. And now going to the ags, going to corn. As you can see, corn has been massively hit. We are now looking at a situation where one wonders whether this is what is beginning to play out in corn, where we're having a market that's creating a top, because this attempt to go up, this is information for traders. When the market is talking to us and something that should have happened doesn't happen, it's information, and it's for us to sit up and notice. That was a significant capitulation, selling from Monday all the way to Friday, and having Friday close the way that it did was very, very interesting. We are now sitting at an extreme demand zone, which is not the greatest quality. It just happens to be the lowest demand zone that caused the highest high so far. That's the only thing it's got going for it. In terms of the quality of the level, the move away, it's not like it's the greatest. It's decent, but not exactly the greatest. So we'll see how it, progresses from here. Would I be buying this market now? Maybe. Would I be selling it right here? Definitely not. I'd want to rally up for me to sell it. Maybe to buy, but not while it's falling like this. It needs to cool down before I look at it at all. That will save you a lot of money, what I just said there. This idea that we should just go in and put a buy order because it's at a demand zone. It works sometimes and makes supply and demand traders feel like, heroes, because they catch, the bottom or very near the bottom. But it's not sustainable. That is just the way that it is. You will end up with a methodology that is low hit rate, and often the psychological aspect does not allow supply and demand traders to hold those trades that they do get for long, because they've had loss after loss after loss, 3, 2, 4 in a row. By the time they do get one of those ones, they get out too quickly, and those ones go. And meanwhile, they're just happy to get out with a 3-1 or a 4-1. When they finally caught the move, they're so psychologically in the ground that they're not able to hold those long moves. So just bear that in mind. Just a little suggestion for you to think about. Sugar also had a nasty week. Got sold down really, really hard. That area again, into that demand zone. Like we said, this area is very parabolic. I discussed with you my idea of trying to buy it, breaking my own rules, and look at that market. It's good. This is why we have stop losses. If I had held on to this market and maybe not even used a stop loss, a small loss would have gotten out of hand entirely, because this market has just tanked. It is now beginning to find some buyers at the traditional trend line that was drawn, but the buyers, really, the demand zone that we're coming into next is not till down there. So we'll see how that pans out. But for now, it's in a clear downtrend. We removed one demand zone. We've now got supply areas being formed above us and all of that. So any rallies now are shortable in sugar. Okay. Soybeans is the stronger sister. It's gone and taken out, or attempted, well, it has actually taken out the highs from the last consolidation. We've still got demand zones below us. They're still in play that we marked out. Last time we were together, those two levels. And we might form new levels here if we do manage, for example, this coming week to get another candle like that. There will be new demand zones of interest formed as these levels of resistance and resupply zones are removed. So that's interesting. So soybeans, corn smashed and soybeans doing better. Very, very interesting. And wheat smashed. Wheat, though, is coming into demand levels again that we've marked. I prefer the lower one, just because we aren't in a clear uptrend yet. So looking at continuation patterns is a bit aggressive for me. So I'm looking mainly at this level down there, which I will score depending on how prices arrive. But for now, it is the area of consideration for me. Supply zones are still, in play. They're still holding. So just be mindful of that. But it is looking interesting. So copper, wheat, we'll see how they play out. Thank you for watching. And if you haven't subscribed already, please do. Click a like button if you enjoy the videos. If you had any questions or recommendations for what else you wanted us to look at, just put it in the comments below. Thank you for your time. Bye for now.